Alrighty guys, so we have a couple earnings to break down in this video, all of which came out today. Actually, no, one of them came out yesterday. Either way, we have 5 companies to go over. We'll break down the earnings, revenue, EPS, and of course, we'll break down the charts and what I'm looking to do with these stocks. So hit the like button, make sure to subscribe. And guys, if you like free money, don't forget to get up to 15 stocks for Moomoo with at least a $100 deposit. Use that link down below or simply go to StockSurfS.com/Moomoo. Get your money. And with that being said, let's dive into it. So I'm sure you guys saw the markets today were pretty rough, right? We had the Russell leading the losses, down almost 2% on the day. The Dow went down about 1.3, as it looks like the S&P went down almost 0.8%, and we had the S&P, or not the S&P, I just said that, the NASDAQ down almost 0.5%, as the VIX went up over 10%. You heard that right. The VIX went up over 10%, and you know when the VIX is pushing up like that and creeping towards 20 points, right? There's volatility, right? There's going to be some selling. And we had a lot of selling today, guys, across the board. And we're going to break down again a couple of these earnings that came out. And one of them I saw already. Their stock went down a bunch. We'll talk about that one in a couple of minutes. But first, let's break down Netflix, who just reported earnings literally an hour ago, and I didn't see their stock chart yet. So let me pull this up, and we'll see how it's looking as earnings just came out. So check it out. It looks like Netflix closed at $643 per share, and when the earnings came out, oh wow, look at that, it dumped down to $600. So initially a 7% drop, and now we've recovered and we're pretty much at the closing price right now. And in other words, we're break even essentially after the bell. So let me see what Netflix ended up reporting. It looks like here the company did revenue of $9.72 billion versus $9.82 billion. Okay, so they missed on revenue, but it looks like here EPS beat $5.10 earnings per share versus $4.74 expected. So mixed earnings from the headline numbers there. Looks like total US and Canada streaming paid memberships 84.1 million. Looks like here anything on guidance, they reported subscriber additions of 8.05 million, which actually crushed the 5.1 million expected. Wow, so they added 3 million more subscribers than the analysts were expecting. That's really good, actually. Let's see, anything here on guidance? Looks like here Q3 guidance is set, but where the heck is it? Am I blind, guys? Let's see here. Looks like they raised their 2024 revenue growth view to up 14 to 15% from 13 to 15%. Okay, pretty good there. And Netflix to begin phasing out lowest cost ad-free $11.99 month basic plan in the US and France. So I guess they're doing that slowly. In specific markets, they're phasing that out. And I'm actually curious, how many of you guys out there watching right now have a Netflix account? I'm sure pretty much all of you do. If you do, let me know in the comments down below, and let me know which plan are you paying for. Is it the basic plan? The other plan, I forget, I think we're paying like $24 a month or $21 a month for Netflix. I don't even know what plan we have. My wife signed up for it. I have no freaking idea. But it's ad-free, and I don't know what the most expensive plan is. But either way, let me know in the comments if you have a Netflix account, and I'm sure all of you will agree. Maybe not all of you, but a lot of you will agree that Netflix still is the best streaming platform. Right now, my 2 favorite ones I would say are Netflix and HBO Max, or I guess just Max is what it's called now because of Game of Thrones and House of the Dragon. I freaking love those shows, guys. But yeah, I would say these 2 are the best. I'm not sure what you guys think about that, but Netflix continues to dominate in the space, right? And now we're actually going green after the bell. Looks like the stock's at $647 now. We're creeping past the closing price. That's a very good sign overall here. So Netflix, I think we're about like $50 away from all-time highs. We almost hit them a couple of days ago. Looks like we hit 697, and all-time highs on the stock are about what, 700? Yeah, 701. We hit those a couple of years ago. So ultimately, I think we're going to break 700, whether it's at some point this week, next week, the week after. That's where we're trending. And, the stock did dump initially when the earnings came out, but that dip was bought up. And like I said, we're going green right now, which is really good for, the stock post-earnings here. So let me know your thoughts on Netflix in the comments down below. Now, the stock that I looked at before this video was Domino's Pizza, which, holy smokes, this stock gapped down big time today, down 13.5%, and you'll see how ugly that gap down is here on the 5-day 5-minute. We closed at what, 475 yesterday, and we got all the way down to $400 in the pre-market, 401 to be exact. That was a 16% drop. So DPZ, Domino's Pizza, ended up reporting, let me see here, guys. Let's come down a bit because they reported in the morning. All right. Geez, there's a lot of numbers here. Hold on a second. Let's see here, guys. Looks like EPS came in at $4.03. All right, not bad. But I'm not seeing the estimates here. Why can't I see the estimates, guys? All right, here we go. 403 versus 366 expected. That beat, but sales missed. 1.09 billion versus 1.1 billion expected. And it looks like here for 2024 to 2028, they still see 8% plus annual income from operations growth. I saw something about store openings. Let's see. They expect to fall 175 to 275 stores below company 2024 goal of 925 net stores and international, primarily as a result of challenges in both openings and closures being faced by Domino's Pizza Enterprises. So I guess they're opening way less stores than expected. That's not good news. Probably one of the reasons why we're going down. And it looks like here they temporarily suspended guidance metric of 1,100 plus global net stores until full effect of DPEs. Let's see here. DPZs rather, or DPEs, whatever. Store openings and closures on international net store growth are known. So I guess they're temporarily suspending guidance there. They're not opening as many stores as expected. They missed on revenue. Yeah, that's going to cause a bit of a drop in the stock here. And I don't know. I mean, do you guys like Domino's? I guess everybody has their opinion. I used to love it in college. Don't get me wrong, man. Me and my buddies, late night, we'd always get... I remember there was this deal where you'd get a medium pizza, you'd get a cheesy bread or some sort of side, and then you'd get those cinnamon twists. What the heck are those called? You guys probably remember, with the little icing on top. Man, that was a killer deal right there, and I think it was like $8 for all that food. We'd all get our own order, but I haven't really gotten much Domino's over the years. Maybe once in a blue moon, when we have people over. The local pizza shops are closed. All right, maybe we'll get Domino's, but I don't know. What do you guys think about it? But either way, the stock is down from 548 to now 409, down 25% in the past month and a half. Not looking so pretty, guys. And we also got earnings out of DR Horton, and this stock, oh my goodness, is exploding, breaking out to a multi-month high, a fresh high on the year, to $177 per share. That was the high of the day. And let me see, hold on a second, wait a second, guys. That's an all-time high. DR Horton just hit an all-time high today. So the company reported, let me see here, ladies and gentlemen, the company reported GAAP EPS of $4.10 versus $3.78 expected. Sales $9.96 billion versus $9.77 billion. So nice double beat for DR Horton. It looks like here they see full year 24 homes closed by home building ops of 90 to 90,500. All right. Consolidated revenues guidance. Let's see, they actually revised their guidance, it looks like here, which is good news. It looks like Actually, no, they lowered it a tad, not really, but they tightened the range of the guidance, pretty much right in line with what it was before. But yeah, looks like they crushed EPS revenue, and that's probably what's sending the stock through the roof right now. Let's see here. I'm trying to see any other insights on DR Horton. Looks like here they expect to generate increasing levels of consolidated operating cash flows. That's good. And again, you guys can see the stock chart is looking beautiful. We're breaking out of this multi-month resistance at about $160, and at this point, who knows where the stock could go next? Who knows where the momentum is going to take it? So the next one is ABT, also known as Abbott Laboratories. Their stock went down 4% on the day after the company reported, let's see here, adjusted EPS of $1.14 versus $1.10 expected on sales of $10.37 versus $10.37 billion expected. So they beat EPS. Revenue came in line with the estimates. All right, it looks like here they narrowed their full year 2024 organic sales growth guidance range. All right, kind of similar to what we saw with DHI, even though they're different companies. They both kind of narrowed their guidance a little bit there. And clearly, this stock has been downtrending for months. The trend looks terrible. I'll be honest. This chart looks like crap. In fact, it kind of looks like a descending triangle. I mean, look, if you want to short a stock, not telling you to go short any stock for that matter, but, this one might go lower based on this descending triangle. We're holding above 100 by a thread. If $100 gives, guys, this might fill the gap down towards the low 90s, which is where we were back in November, October, right? So be careful with ABT. It might be going lower. Now, the last stock for the video, guys, which, by the way, if you stuck till the end, I appreciate you as always. Smash that like button. Let's run the likes up, at least 100 likes on the video, and don't forget to subscribe. We're trying to get to 100,000 subs this year or next year. Very soon, whenever it happens, we're trying to get there ASAP. I appreciate you all for tuning in here. UAL, United Airlines. Let's break down what's going on with United Airlines. And I actually just flew United Airlines to Italy about a week and a half ago, 2 weeks ago, and we flew back United. Pretty good experience. Honestly, I have nothing bad to really say about United. In fact, on the way there, guys, to Italy, we got so lucky. We were in whatever row we were in, and this family booked the exit row, and they had a kid. And apparently they didn't know that a kid can't sit in the exit row. I guess they were able to buy the tickets, and I guess they weren't denied when they bought the tickets, which is weird. But yeah, a kid can't sit in the exit row. They had a kid, and they were like, they were calling my wife's name on the speaker before we were, boarding the flight, and we were like, holy crap, why do they want to talk to us? What's going on? And then we go up there, and they're like, hey, do you guys want to, switch to the exit row with this family? And I was like, heck yeah, we do. Let's do it. No charge, obviously. It was free. And we had this massive, exit row. I was pretty much laying down. It felt like first class, even though it was economy. It felt like first class, guys. That's how good it was. Either way, United Airlines, from my experience, not too bad. And the company reported earnings, and it looks like their stock went up a little bit. This was yesterday. The company, let me see what they did here, guys. They reported adjusted EPS of $4.14 versus $3.95 expected. All right, sales $14.98 billion, which missed the $15.09 billion. So they beat EPS, slightly missed on sales. And let me see here. They continue to expect full year adjusted EPS of $9 to $11 versus $10.04. That's pretty good there. Anything here on revenue guidance? Looks like they generated Q2 net cash provided by operating activities of $2.9 billion and $1.9 billion of free cash flow. Pretty good there. Not seeing much on revenue guidance, but look, this chart actually looks pretty good for a continuation play. We got beat down from 56 to 46, right? You guys see Now we're at the bottom of this channel. We're fighting to hold a higher low. In fact, buyers are already coming in. So let's see if this, starts pushing over 50. That's where I think the breakout could be coming, to the mid-high 50s. So I'll set my alert right now at $50. Actually, no, let me do one at $48 per share, and we'll monitor it from there. We'll see where it goes. So yeah, guys, that's pretty much it for this video. A bit of a longer video today. We covered 5 companies, 5 earnings, and the charts. What do you guys think? And full disclosure, I'm not long any of these stocks, but I'm considering them for trade, some of them at least, and we'll see how it plays out. So let me know your thoughts in the comments. And before you click off, if you guys like free money, who doesn't like free money, check out that Moomoo link down below. Once you open up your account and fund it with at least $100, you get up to 15 stocks from the platform for Moomoo, and your uninvested cash for a limited time, get this, will earn 8.1% APY, which, guys, come on, that's a no-brainer. That's unheard of. So again, it's a limited time. Check out that link down below, or go to stocksurfest.com/Moomoo. And with that being said, I'll catch you guys in the next video.